as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Welcome to this Stockbox interview where Mike Ralston, the CEO of Blencowe Resources, joins us today. Mike, it wasn't so long ago we spoke. Good to have you back on again. How are you doing?
Yeah, I'm very good. Thank you for having me.
Great. It's good to have you on, and with good reason, of course, because I know on the last interview we spoke about the drilling campaign, which of course is now completed. But before we get into discussing the results, I see you've got a presentation you want to quickly run through on Blencowe Resources, just to give everyone a good synopsis of what you're all about and where you're heading.
Yeah, I thought before we talk about the RNS and the recent announcement, let's just have a quick look at Blencowe, and in particular, having a look at the EV market and what that's going to do for graphite. And obviously, we're developing the Orom-Cross graphite project in Uganda. So the leverage that we have into that particular market going forward. I'll start with this particular slide here because it's very important to see what's going on. In fact, December 19th, there were 7.5 million EVs in the world. There are about 11 million now. So we're starting to see the momentum moving upwards. But what's very, very important to see there is Benchmark Minerals Intelligence are forecasting somewhere between 140 million and 600 million EVs by the end of the decade, which is a huge leap up from 11 million today. And the drivers of that growth are noted in both macro and micro market terms down below. And there's a host of these reasons. I guess from a macro perspective, there's a lot of politics going on. There's a lot of government stimulus spending happening, which is supporting the rollout of recharging stations, etc. Joe Biden's victory in the US election has played a key role in this. And there are an enormous awareness, I think, a generational transition going on. And then in the micro market, we've got costs of batteries, costs of vehicles coming down, energy storage and densities are changing, and the batteries themselves are not only getting cheaper, but they're getting better. And everywhere we're looking, particularly, I guess, with Tesla being so visible in the market, there's just a lot of momentum in this space. And so I guess it's one of the fastest trends worldwide, and we're going to see a lot of movement in this space going forward. Moving on to the next slide, what does that mean for us in terms of Blencowe? We're massively leveraged into this space. I think it's fair to say, as Elon Musk has said before, that because graphite is such a significant part of the lithium-ion battery, it could easily be called a nickel graphite cell instead of lithium-ion. But that's by the by. For us, what's very important to note is that about 50% of the weight of each and every lithium-ion battery is made up of graphite. And as we start to see the growth in this particular sector, and that means every single electric vehicle is going to require lithium-ion batteries. Every lithium-ion battery requires an anode, and the anode is primarily made up of flake graphite. So there is an enormous quantity of graphite that is going to be required going forward to fulfill these 140 million to 600 million EVs that is being forecast or predicted by the end of this decade. And it doesn't just stop there. I think it's quite important to note, everyone sort of seems to draw the line in the sand at 2030, but obviously beyond that, there's considerable exponential growth forecast as well. And the leverage that a company such as Blencowe, which has got 100% of one of the largest high-quality flake graphite projects in the world, has into this particular momentum shift is phenomenal. And we've got to make sure that as we go forward, we continue to develop this project, continue to bring it forward and have the ability to upscale production, because I'm sensing that there's going to be quite a considerable change that occurs over the next 5 to 10 years in this space.
Yeah, I agree there. And it's not just Tesla as well. I noticed yesterday, I don't know if you saw the headline from Volvo, that they are only going to sell electric cars by 2030. So there's a big headline there as well.
Yeah, and Land Rover and Jaguar have actually said 2025. So they're even a little bit further forward in terms of what they're saying in terms of EVs only. But just to put this growth into perspective, there are today 186 mega factories that are either in production, making lithium-ion batteries, or in the process of going into production, i.e. being developed. 186, there were 40 of these 2 years ago. So the growth in the factories that are building these lithium-ion batteries is phenomenal. And to put that in context, the biggest of them all is the gigafactory that Tesla own in Nevada in the United States. And they're forecasting to use 1 million tons of flake graphite on their own, one factory, by the end of the decade. So that puts it in perspective how much graphite is going to be required. At the moment, about 400,000 tons per annum of flake graphite is being used in this particular EV space. And one gigafactory is going to require 2.5 times that in the next decade. So it is a huge growth. And I think this is what we're going to see happening. And certainly this is what Benchmark Minerals Intelligence is forecasting, a big demand supply deficit. So that green line that we see in the graph there is the forecast demand for flake graphite, and the boxes that you see growing ever so slightly down at the bottom is the forecast supply, with the blue boxes, or the dark blue, being what is actually in production today, and the green and the light blue being what they forecast to come into production going forward. So there's not that much, despite the fact that everyone seems to think there's an enormous amount of graphite in the world, and there is. Not all flake graphite can be used for lithium-ion batteries, and not all projects are obviously going to get into production. So somewhere around about 2026, 2028, we're going to start seeing a large gap emerge. And as this demand-supply deficit grows, I believe that we're going to see prices start to spike, and that's going to create some interesting times for graphite producers such as Blencowe. So that's a very interesting graph to note. And then having a look at some of the prices, we're not just going to be selling small -100 mesh size flake into the EV markets. We've also got jumbo and large flakes, which are used into a completely different market in terms of steel foundries and expandables. And that gets about 3 to 4 times the price per ton of the smaller fines product. But we will have a weighted average, which we expect on today's pricing would fetch us around about $1,000 per ton for all products sold. And we're targeting a total operating cost of $350 per ton. So plenty of margin, but we've got some work to do to complete our met test work and understand what our final product, our end product, will look like in complete, i.e. as how much percentage of each particular type going forward. I'll go through there. There's a graph here, a slide which talks about the various different applications. It's really just for people that don't understand graphite. Everyone at the moment seems to think that every bit of graphite is going to go into lithium-ion batteries, and of course there's going to be huge demand going forward. But there are a number of different other applications, and a lot of it is to do with the size of the flake, and there's different prices that go with all those different uses as well.
Okay.
In terms of the corporate overview, we've got a company that's sitting on the standard listing of the London Stock Exchange. We've brought in this project last year, so we're not even a year old in terms of bringing Orom-Cross into the company, and we raised £2 million in April last year, and a further £800,000 over the last couple of months. So we're feeding cash in as required. We don't believe it's necessary to go out there and raise tens of millions of pounds at this stage. We'll obviously have to raise that bar a little bit as we go forward into some of the more complex feasibility work. But at the moment, we've got plenty of cash in order to do what we've got to do in the next phase.
Okay, good.
And I'll move through board and management because we've probably spoken enough times for people to understand who we are. The project itself sits in northeastern Uganda. For those people that don't know where Uganda is, it's in East Africa, a former British protectorate, a very stable African country. President Museveni has run the country very competently over the last 30 odd years. So there's a lot of stability and continuity there. The project itself is incredible. Some 2 to 3 billion tons of graphite sitting very near to surface. So it's going to be a very shallow mining operation, low strip ratio, low operating costs. We've already been granted a 21-year mining license, which is very important. And I think because of that, we're going to be able to fast track our move towards production a lot quicker than we might have done so in another scenario. So we're really working through the process of getting a feasibility study completed as quickly as we can, with a view towards moving into first production around about that 2024 range, which we were talking about, where the demand, supply, and balance starts to kick in.
Okay.
Milestones going forward. We've completed a 2020 program of resource drilling where we did about just under 2,000 meters of diamond drilling. We focused on a particular area where we would we sought to drill out approximately 10 million tons, which we believe will be equating to the first 10 years of mine life. It doesn't mean that we can't go and drill out some more. There's plenty of graphite around, but in order to try and fast track this and not spend the next 5 years just drilling and drilling and drilling, because we could be drilling forever there, we focused on a particular area to bring it into JORC so that we could do our studies on that particular area and concentrate on the met test work, which is what we're doing at the same time. And as I say, the second half of this year, we will be moving into feasibility study stage. So that's where we are in terms of our work program. I'll kick across now just to the RNS that was presented to the market last week. And actually, this one was this week. So we've had two very good RNSs recently. This is the second of them, which came out just a couple of days ago. And what this highlights is that we've got some very, very high-grade graphite within our intersections there. We've got very shallow graphite. As you can see, some of it is presenting from 1 meter, some of it's presenting from 2 to 3 meters. So there's an enormous amount of graphite near to surface, and we've got some decent grades within there as well. And that's everything that we were looking for, everything that we were predicting, and it's all going to be moving towards our maiden JORC standard mineral resource estimate, which we're hoping to get out before the end of March, so literally around the corner. And that's a huge milestone for us to have completed the drilling, to have completed the lab work, the assays, and to get that out within 12 months of acquiring the project in a world that's been a little bit stumbled by COVID, I think is a tremendous effort. So this is the Eastern Syncline lode. We also did the camp lode announcement just prior to this, and we had some exceptional graphite grades also near to surface coming through on that particular one as well. So we're very excited about this, and we think that it's going to underpin a decent maiden JORC resource. We've estimated that over the entire JORC we'll probably be in the 7 to 9% range, but we've got some very good high grades within that. And certainly on that camp load, which we announced 2 weeks ago, we've got some low-hanging fruit in terms of what we might be able to mine first to obviously kick off. So that's probably where I will leave it. I can go back to the presentation and take you through where we're going on our work program, but it literally is a focus on getting the JORC resource out, getting our met test work out so that we can understand the mix of products, of end products that we're going to be able to sell into the market, and then moving as quickly as we can into an internal study, which we'll get out very quickly, and a pre-feasibility study before the end of the calendar year.
Okay. Now, just on the grades, Mike, there, I wonder if you can just explain how grades sort of work in the graphite. A lot of people will be familiar with gold grades or copper grades, but perhaps not so much with graphite grades. So what grades determine good and not so good grades in regards to graphite?
So I think the sort of norm, I guess, what people see is somewhere between 6 to 8% as an in situ grade. Some of the higher grade projects we're seeing around have between 10 and 15%, and a very high grade would be anything above that. And obviously within that, as I say, there are high grade pockets that one can look at. So it's about obviously what your grades are in the ground, because the more you've got within a particular meter or a particular cubic meter of what you might go ahead and mine, the more graphite you're going to be able to extract ultimately through your processing facility. And like any other metal that listeners would be more familiar with, whether it be gold or copper or anything else, the greater the percentage of what you've got there in situ, obviously the more you're going to be able to get out from the same amount that you're mining. However, with graphite, the most interesting or the most pertinent part of it is what you can do with that. And one needs to take it. I'll go back to the presentation and show what we're looking to do here in our MET test work. Our targets are to upgrade to a 96 to 97% total graphite content, which is basically taking a concentrate of a lot of value, particularly with low impurities, and also to achieve a high recovery. And if we can, to get a majority of jumbo and extra large or large flakes within that, because we'll be getting a higher price for them. Having said that, I'm pretty confident that the minus 100 mesh, the smaller fines product, will be increasing in price considerably over the next 5 to 10 years per that demand, supply and balance graph that we showed earlier.
Yeah, but it's the larger ones that are more in demand for EV batteries.
No, the smaller mesh, if I go back up to the applications page that we had before, the smaller mesh product, there you see is on the right-hand side is what lithium-ion batteries are used, and the jumbo to large is used in flame retardants, thermal sheets, expandables, etc. So they are two different markets, but the lithium-ion batteries, and if we go to the pricing here, you will see that the smaller plus 100 or minus 100 mesh sizes do achieve a lower price, but it is a market that's going to increase as the demand, supply and balance shifts. And in fact, these prices that we've got in here from October last year, I've seen that the price has moved up about 15% since then at that level. So we are starting to see the prices move and shift as we speak.
I mean, if that graph you showed before about the supply and demand, that's pretty scary, isn't it? That there will actually be a massive shortage.
It is scary. And, you can get a different quote from Elon Musk almost every day, but he's literally saying that anybody who can get hold of EV battery projects, that being lithium, nickel, graphite, the key products that go into the lithium-ion battery, you should grab them with both hands, particularly if they're good ones, because if you looked at the same graph here and you just replace graphite with nickel, or you replace it with lithium or any of these other participants, I suppose, in that lithium-ion battery, you're going to see a very, very similar type of graph where the demand, supply and balance is going to kick in. And anyone who follows Benchmark Minerals Intelligence, who are probably one of the leaders worldwide in terms of forecasting and analyzing this particular battery metal space, their managing director, Simon Moores, is standing up in front of Senate committees in Canada recently, in the United States, and he's telling them that they're going to see big shortfalls and they need to understand that there are going to be shortages and they need to react to that. So it's definitely going to be an interesting space going forward, for sure.
Indeed. Okay, well, just coming back to the company for a moment here, you've definitely made rapid progress, as you said, going forward, and you've got the JORC coming up, haven't you, as well? And you had the results come out very recently. Do the results, I noticed in the RNS that you said that it confirms the geological interpretation. So you must be pretty pleased that what you thought was there from pre-work has been proved up to be the case from the recent drill results.
Absolutely. And I think that, there were a couple of key things that we really had to try and ensure when we went out there and drilled it. The first of which was the graphite itself in terms of the percentages that we're getting in situ. The second was the shallow nature of it, so that we were achieving a vast majority of it between 0 and 20 meters underground. And beyond that, it was just understanding I suppose the geology and understand the composition of how we're going to be able to mine it going forward. So in all those areas, we've been very comfortable. The next real phase for us is the met test work, as I say, to get to these concentrate that will obviously have the high value. And that will be coming out over the next quarter. So there's good news flow ahead in that particular area. But yes, in terms of the actual drilling and the JORC, we are very excited by what we've got there.
Great. Okay. So yes, the JORC coming this month, you said. So that's something that we can look forward to. And then, of course, a pre-feasibility study, a big key milestone there scheduled for the second half of 2021. So there are definitely no plans to slow down. If anything, you're speeding up, I'd say.
Yeah, we love this space. As you can tell from my voice and from the passion, we believe that the battery metals space is the right one to be in. We would definitely like to stay in this particular battery metals area, and obviously this project is a winner. So it's not just the PFS. We've got an internal concept study that we'll get out much quicker than that, which will give us, it's only going to be an internal study, but it will give us a very good flavor of what this project is going to look like in terms of the economics. But if we get good met test results that come out over a good maiden JORC resource, I think we've got something here that's quite special. And I think one of the key elements for us is the location in Uganda, because whilst there's a lot of graphite around, there's plenty of it in difficult locations. There's some African locations, Mozambique, Madagascar, even Tanzania. There are difficult locations, and we think Uganda's got some significant advantages. So we like the fact that it's there. We're working together with the government in terms of getting some infrastructure in there that we're going to require. And yeah, it's just as fast forward as we can do. Travel is obviously a bit restricted at the moment, but I think that will change into the second half of this year, maybe certainly into next year. And we're just going to keep going as quickly as we can, but doing it properly, of course.
Of course. Okay, well, Mike Ralston there, the CEO of Blencowe Resources, thank you very much for your time, and I'm sure we'll be speaking again to keep tabs on how the project is developing, but thank you.
Pleasure. Thanks again for having me.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.